I've been getting a lot of questions about what entity should you form if you invest in real estate, especially from people that are also business owners. So in this video, I'm going to show you why you must separate these type of business activities and separate their legal sort of structure. So maybe you're a realtor and you want to invest in real estate, or maybe you're a YouTuber or a physician, any type of business owner, but you also want to invest in real estate. This video is going to be for you, and I'm going to teach you, what you should be doing so you don't make this critical mistake. If it's your first time watching, my name is Navi Miraj. I'm a CPA that produces content all over social media to help save you thousands of dollars in taxes and educate you about tax strategies. So if you like what you hear, then please consider subscribing so you don't miss out on a future video. But the topic of this video is this. So the IRS classifies your income as either passive activity or active activity. Okay. So if you're running an operational business, such as, you're a realtor in that example I used a moment ago, or a physician, an e-commerce store, then you have, or you're heavily involved in the day-to-day activities of that business. So that means that your business profits are subject to both, income taxes and self-employment taxes. It's a profit of your business that's subject to those taxes. The amount of income tax that you pay depends on your specific situation and where you fall within, the federal tax brackets, right? But the amount of self-employment tax you pay is pretty much fixed. It's 15.3%. And if you haven't heard of the term self-employment taxes before, self-employment taxes are basically Social Security and Medicare taxes. So when you're involved in passive activities, such as rental real estate, that income or that profit that you get from those rental activities is subject to income tax, but it's not subject to self-employment taxes. So you don't pay self-employment taxes on your passive income. Now, if you make the mistake of putting your rental income in, let's say, a Schedule C, or, you flow that income through an S corporation, you'll now be subjecting that rental income to those, 15.3% in self-employment taxes. So, I just gave you all that information sort of out loud and verbally. Let me help you, solidify your understanding with this visualization I created just for you and this video. So this is going to help reinforce what I just said a moment ago. So let's take a look. Let me explain what we got going on here. I'm kind of splitting your income or your life, your business life, into two sides here, right? So I'm taking the active income and the passive income. All right, let's focus on the active income for a second. So active income, again, subject to income tax at the federal and state level, as well as self-employment tax of 15.3%. Now, if you're going out and just conducting business, you haven't formed any entities, then you're over here on the left with this green circle that I'm just calling a sole proprietorship. You may have formed a LLC, and you might be the only person on that LLC. If that's the case, then by default, if you didn't file any additional paperwork with the IRS, then you're also going to be taxed as a sole proprietor. And that income, when I say income, I mean that profit of that business. So you have your revenue, you're deducting your expenses, you're left with a profit. That profit is going to end up on Schedule C and be subject to the income and self-employment tax. Now, you might be wondering, what's this S corporation circle I have here? Well, once your business is having profits of $40,000 or more, it may be advantageous for you to actually have your business taxed as an S corporation. If you do that, it's a strategy that saves you potentially upwards of $10,000 in self-employment taxes, and your tax return, the one that you would file, is an S corporation tax return. It's on Form 1120S, but again, the S Corp basically is your operational business, your active income flowing through an S Corp in order to save money in self-employment taxes. But both of these active activities end up on your individual tax return. Again, if you're a sole proprietor, it all lands on Schedule C and flows into your individual tax return. If you are an S corporation, you file a separate S corporation tax filing, and that money will eventually flow into your individual tax return. All right. So that's the active portion of your income. The passive income, this is for your rental real estate. Okay. Where you're the landlord and you have a tenant. This income is subject to income tax, but it's not subject to self-employment tax. All right. So let's talk about what entities you might form for this. So you might have a single member LLC that you formed. That means you formed an LLC with your state, or you might have a multi-member LLC if you're investing with another partner. Okay. If you didn't form an LLC to conduct these activities, that's okay. If you didn't form an LLC, then that income is going to end up on Schedule E. Or if you invested with more than one investor, so it's you and someone else, then whether you realize it or not, if you didn't form an LLC, it's also going to end up on a partnership tax return, which is the Form 1065. Okay. I'm going to pause for a moment. I want to mention something because it's another question that I get quite often. The single member LLC or the multi-member LLC, if you're forming it for your passive income for your rental real estate, it's not saving you any money in taxes, okay? You'll get the same tax deductions that you would if you didn't form an LLC, okay? The LLC is strictly to limit your liability. Now, you're going to want to talk to a business attorney to really confirm or really understand that exactly what that means. That means you have an operating agreement and you're conducting business the correct way to get the benefits of that LLC. But basically, you're limiting your liability. So if your tenant tries to sue you, they may not be able to, or they may not be able to come after, some of your personal assets or, the equity that you have in that rental real estate property. All right. So the distinction there, just in case I lost you, is that if you didn't form an LLC and you're involved in rental real estate business, you're going to get the same tax benefits for the person that did form an LLC. So that's just the distinction I want to make there. The LLC in that, used in that capacity is strictly to limit your liability if a tenant sues you. All right. But the bottom line is it goes on a Schedule C if you're a single investor. I don't know if I said that properly. Schedule E is what I meant to say if I did say something different. Schedule E, if you are having another investor involved, then it's going to go on a partnership tax return, and that income is going to flow into your individual tax return as well. But this black sort of bar that's running down the middle is to indicate this passive activity. You don't see it flowing through a Schedule C or an S Corp return, because if it did so, then you're kind of subjecting it to self-employment tax of 15.3% when it's not subject to that from the get-go. The IRS says it's a passive activity, so you don't have to be paying those self-employment taxes, all right? So be careful here, right? I hear so many people use the term passive income incorrectly these days, and you need to make sure that you're using the term properly as it relates to the IRS. Selling on Amazon via, FBA, or income from YouTube, or selling courses that you created is not passive activity in the eyes of the IRS. I get it. You want to call it passive activity because, you put in a lot of the work up front, and then you might receive some ad revenue, or, your product continues to sell on Amazon or what have you. But in the eyes of the IRS, they don't consider that passive activity, okay? The most common forms of passive activity in the eyes of the IRS really are rental real estate, which is what we discussed here, or, income from investments that you have, such as dividends, or perhaps you invested in a business and infused quite a bit of capital in that business, but you're not day-to-day managing that business. You just receive a portion of the profits for your capital infusion that you made. All right. So after learning all this or hearing some of these things, you might be wondering, well, where can I form these entities? Where can I form an S Corp so I can save a few $1,000s in taxes? Well, let me, if I may, pull up my website real quick and show you that. Okay. So on my website, which is, you can reach it by going to navimuradcpa.com. If you scroll down, you'll see I've compared the top 3 online business formation companies for you. Okay. And in doing this research and forming this website, basically I realized that there's these companies out here that will do this completely for free. So let's look at Inc. Authority for an example. If you want to go there, visit my website, you click on these links, it'll take you straight to their website, but you can form your entity for free. So they'll form your LLC or your corporation and not charge you anything for it. They'll even act as your registered agent for the first year for free. They'll even make the S Corp election paperwork with you for free. Okay, the only thing that you would really pay is if you add on any additional services. So if you have them apply for your EIN number, then they'll charge you $49. But I think that's well worth it to form your entity and just pay $49. All right. Also on my website, while we're here, is, sometimes people will email me and they have questions, and that's cool. I'll try to answer your question if it's quick, but if not, schedule a 30 or 60 minute Q&A session with me, and I'll answer your question in greater detail. Sometimes you watch these videos, you think you understand what you need to do, but you just have a handful of questions you need to ask to solidify your understanding. That's a great way to do so. Alternatively, if you scroll down, you could see my entire video library here, okay? And it's organized into different categories. So basic tax concepts you should know is here. LLCs and S Corps is here. Tax planning, again, there's other categories. Now, with that said, I want to mention one more thing to you before I kind of let you go, and that is, if you're a business owner and you want to learn more about these sort of tax strategies and how to save thousands of dollars in taxes, I'm actually in the process of creating a course. If you go to my website again and you click here, what will happen is you'll learn more about the course itself, and you can register for the waitlist. Okay, it's still in production. The course is still in production. But what I'm going to teach you in the course is the basics. So what's an effective tax rate? What is a marginal tax rate? How is your business tax? How are sole proprietors tax? How are S corporations tax? I'll show you all of that, explain it to you with visualizations in the course. The content for that's already created. Then we'll go through a calculator that I created. It's a pretty robust calculator that I invested a lot of money and time in, and we'll walk through the tax strategies together. And you'll enter the values that we calculate together for your specific situation as we go down into the course, all right? And so when you finish that section of the course, you'll realize that by implementing the strategies, you could be saving $7,000, $10,000, $20,000 in federal, state, or self-employment taxes, okay? But then I take it a step further. Now, this portion of the course hasn't been recorded just yet, but I'm going to show you how to implement those strategies in your accounting software, such as QuickBooks, all right? So you'll learn how to do all those things, and, how to put $50,000 into a solo 401k plan, for example, okay? And you can do that in a single year if you're a business owner. Anyway, that's the course. Please do register for the wait list. Many of you have done so already. So let me kind of wrap up. I hope this video was helpful, or at least educates you on why you shouldn't mix passive income with active income. You need to separate that activity into separate business entities, okay? If you're a realtor, for example, you guys ask me this question all the time. You don't put your rental real estate income into your, Schedule C or S Corp income. You're going to end up subjecting yourself to a lot more tax if you do that, all right? If you learned something and you receive value from this video, please consider subscribing and sharing it with a fellow real estate investor, or maybe you're going to invest in real estate with someone else. Share this video with them so they can understand and they can learn about this topic, all right? Thanks so much for watching, and I'll see you in the next video.